Hello. Welcome back to the Millennial Investor Series, where we break down investment terms and make them very simple. This week, I have themed this episode Before You Invest. I'll be sharing with you 2 key points to consider before you invest in any of these investment markets or options, right? 2 points before you invest in the money market. The money market is the market where you trade short-term securities. I have a video up about the money market on my channel. You can check it out. But before you invest in the money market, you need to understand that to a large extent, economic conditions determine the rate of return that you will get on money market instruments. So for instance, Treasury bill is a money market instrument, right? It's a short-term security. You can either invest in Treasury bills for 90 days, 182 days, or 365 days, right? But to a large extent, the rate on Treasury bills, the rate of return on Treasury bills can be different year in, year out. For instance, maybe 10 years ago, Treasury bills were trading maybe say 5%. Yes, in Nigeria, they were trading at a ridiculously low rate. That's because at that time, there was no reason for the CBN to give an incentive to investors to come and invest in a safe investment option, right? But then we saw the rates on Treasury bills peak, I think in 2017, 2018, more of 2017, it went to about 18 to 25%. Yeah, Treasury bills were actually around 18 to 25% at that time. That was because the CBN, the Central Banking Authority, was really trying to encourage investors to bring in money into the economy to invest, and they wanted to give them an incentive to do that, right? And sometimes the CBN might also be wanting to mop liquidity in the system, and so might increase the rate on Treasury bills so that more people can take money out of the system and put it in an investment, okay? So sometimes market conditions, and today Treasury bills are about 9 to 11%. That's the rate right now. So don't expect the rates will always remain the same. It might drop in the next few months. Who knows? Depends on where the economy is going. Economic conditions determine the rates you might get on money market instruments. First point. The second point is you check around various investment institutions to know which investment institution offers the best rate on Treasury bills, right? Some might offer you at a rate of less than plus 1 or 2%. Some might offer at a rate, that is maybe comparatively better compared to what they get at the auction with the CBN. So ask around, call 1 or 2 banks, call the customer service desk, call your financial institutions as well, and just ask around, what's the rate on your 90-day Treasury bill? What's the rate on your 182-day Treasury bill, and compare this rate, and based on that, make a decision on which financial institution you want to invest in, right? So those are the 2 points to note before you invest in the money market. Now let's go to the stock market. Before you invest in the stock market, do your homework. The stock market, right now we have a red market, right? It's not a very attractive investment market right now. It's really bearish. It's been bearish for the past 1, 2, or 3 months, I think, yeah. And that's because that's how the stock market works. Really, it works in cycles. There will be peak periods and there will be recessionary or low periods, even if it's not a recession. That's just how the stock market works. The stock market works in cycles. There are bubbles, there are peaks, there are dips. That's how it works. But you need to understand that when you're going into the stock market, it's a long-term play. All right? A lot of people go in thinking that they can make the fast buck in 1 or 2, 3 months, and some traders do, to be fair, but you have to be actively watching the market every day to be able to trade profitably that way. But understand that the stock market is a long-term play, right? And pick stocks with very good fundamentals, right? The first thing to note is the stock market is a long-term play. Do your homework before you decide that the stock market is an investment option you want to invest in, right? It always works in cycles. Don't get carried away with the fact that you can put your money in and make your money immediately. It's long-term. The second point is focus on the fundamentals. This is how I always say it. Think about a company that you would want to own shares in, a remarkable company, a respectable company, a brand you respect and admire that is really doing well in the marketplace. And then go say, okay, these are the companies that I really, admire in this Nigerian market. Companies that are always selling recession in, recession out, they're recession proof. Whatever is happening to the economy, they still always manage to stay afloat, right? Think about those companies. Think about the brands you admire. And then say, okay, I want to own shares in this company. That's one way you can think about it. It's a very simple way you can think about it, actually. So you can think about a company like Nestle, for instance. They produce products that people are always buying, right? No matter what happens in a recession. Think about companies that sell the breweries if you are not someone that thinks about it in terms of ethical terms. Whether there's recession or no recession, those companies always sell. and then check out their financial statements, right? So remember, I said companies you admire, right? And then check out their financial statement, because the fact that you admire them doesn't mean they might be doing well financially, right? So if you don't know how to read financial statements, speak to your stock analyst, ask them to make recommendations for you, or speak to someone that you know that understands how to analyze financial statements to know if that company is actually profitable, if their cash flow makes sense, or do they have debts that they're paying off, do they have some significant, leverage or something that might harm their profitability in the future. So focus on the fundamentals, very important. All right, those are the two things to consider before you invest in the stock market. So let's go to real estate quickly. Real estate is one stable investment option. It hardly ever depreciates. In fact, the only reason why it would probably depreciate is because it was overvalued in the first place, right? So if at the point of you buying or purchasing a piece of real estate, it was overvalued, then the value will drop. That's basically what will happen. Or if the real estate was valued at the right price, right time, based on demand and development around that area, then it will most likely appreciate over time. So two things to consider before you invest in real estate. One, always do a site visit, please. This is Africa. This is Nigeria, to be very specific. Always do a site visit. Don't just believe anything that you are told, or anything that you see on media, or anything that you read by email, or someone sends you a piece of document and says, oh, that's documentation for the land. Always do a site visit, ask questions, ask around, just to be sure that you're getting into the right deal. The second point is negotiate. Always negotiate whatever price you are given, right? The fact that they tell you this is the value of the land, this is how much you have to pay, you should always negotiate. Think about a way that you can negotiate, maybe based on the power of many. Can you come together with a group of friends and maybe that will give you the power to negotiate? And can you negotiate a payment plan as well? If they tell you have to pay cash down at that time, it may not be wise for you to put all your money down for a deposit. Think about how you can negotiate a longer period, 12 months, 24 months to pay. All right, so always think about negotiating. Very important for real estate, okay? Let's move on to this final investment option. I always get the question, Tomie, what do you think about Forex trading? All right, I think it's time for me to just address it once and for all. The underlying market for foreign currency and for trading foreign currency is a very solid market. Facts only, all right? Because think about it, anytime you travel from one country to another, you always have to change your currency. That's you trading in one currency to get another currency. So for instance, if I am traveling to America, I have to trade in the naira to get the dollars, because the dollar is the official currency in America. If I'm traveling to London, I have to trade in my naira to get pounds. Now, if someone is traveling from London to Nigeria, they have to trade in the pounds to get naira. So it's a legitimate market. Countries around the world are always trading foreign currency. Big corporations that operate in multiple countries always have to trade currency in different countries, different time zones, all of the time, right? But that's what it is. It is trading. That's exactly what it is. If you're going to think about it as an investment option, you need to understand that if that is something you're going to add to your portfolio, it should be just one option and not the only option in your investment portfolio. And then, are you really well suited to trading? Because trading requires a lot of discipline, perseverance. The same way you can make $2,000 is the same way you can lose all of that $2,000 and even be at a loss-making position. I think you should take time to understand how the Forex market works. Think about how you can work with experts. Be very careful. I see a lot of network marketing structures or models around Forex trading. Be very careful that it's something you actually want to do and something you actually have time to do, all right? There are some people that offer brokerage options that tell you, give me some money, I'll trade for you. You need to also understand the risk associated with that kind of option, because if they lose your money, they've lost your money, right? So it is a trading option. I don't even consider it investing, because if you are not actively involved, someone is actively involved in the back end trading for you, and hopefully you get your money back. The truth is, you might not get your money back. All right. So on that note, I will leave you with the 2 points to consider before you invest in the money market, before you invest in the stock market, before you invest in real estate, and before you consider putting your money in Forex trading as well. If you have questions, if there's anything I didn't get into, leave it in the comment section, and I'll see you next week.